All right, let's give you the markets update now. The JSE expected to start this week lower as markets digest the latest U.S. economic data released on Friday and new geopolitical tensions arising from the war in Ukraine. Rella Suskin is head of research at Benguela Global Fund Managers, joining us now for a quick analysis of how the JSE is performing in early trade. Rella, good morning to you. So your quick overview of how the Johannesburg Stock Exchange is performing in early trade, and anything that stands out for you that we should look out for the week ahead.
Morning. So our local market has kind of followed global markets, going quite deeply into the red first thing this morning. One of the major movers is that NASPAs and process are down quite a bit, and that's on the back of new export control regulation announced in the US on Friday, really limiting any new equipment technology that's involved in the production of semiconductors to be used in China. And so that's hitting the tech sectors in China quite hard this morning. Looking forward, I think the big macro data that the market's going to be looking at is US CPI, which is expected to be up 8.1%. And then we're moving into US earnings season. So there's going to probably be quite a lot of volatility as we await results from some of the big US companies.
Let's talk about commodities. Oil prices subdued in early trade, while gold has dipped to a one-week low. Talk us through some of the factors that are driving these moves.
Yeah, so I mean, on oil, we saw oil have a very strong week last week, following OPEC announcing that they were going to cut 2 million barrels of in production a day, which was much higher, or double what the market was expecting. But yeah, that rally seems to have tapered off a bit, where concerns have gone back to now global growth concerns. And so we're seeing oil take a bit of a breather. On the gold side, yeah, gold is looking weaker, and that's really on the back of, again, US inflation numbers expecting to be higher on the back of the strong jobs data that came out of the US on Friday. As long as we are seeing higher, or expect higher inflation from the US, the Fed's likely to continue to increase interest rates, which makes sort of the unyielding gold look less attractive, or there's a higher opportunity cost in holding gold.
Let's talk company news. Kumba Iron Ore saying they expect to take a huge hit after the force majeure which was declared at Transnet. Talk us through those developments.
Yeah, so they're expecting to see production down by 50,000 tons a day within the first week of the force majeure. Beyond that, they're expected to escalate to 90,000 tons of production disruption. And from a sales point of view, they're expecting 120,000 tons per day to be lost in export sales. This really, I mean, it all depends on how long the strike lasts, but it's about 0.3% of annual production a day. So, I mean, over a week, that's about 1.5% of production that would be lost.
Let's conclude the conversation with SAPI, which has provided an update which for the fourth financial quarter, which ended on the 30th of September 2022. How are their numbers looking?
Yeah, so it was a very brief update from SAPI. All they're really guiding to is that in August they came out with an update at the end of Q3 to say that they expected Q4 EBITDA to be lower than their record Q3 numbers. This update says that Q4 numbers are actually higher than Q3, so exceeding previous record. So really a strong update from SAPI, and it will continue to improve their balance sheet.
Rella Suskin, thank you very much for that markets update. Head of research at Benguela Global Fund Managers.